morning everyone. Thank you very much for joining the Q2 2016 webinar today. Financial and operational performance for the second quarter of 2016 has been very good. We've delivered the vast majority of our operational KPIs, and the financial performance of the company has also been very good, showing an increase in sales revenues and gross profit. Moving on to the operational update, the quality of water supply to our customers remains very high. Water quality for the first 6 months was 99.93%, with only one failure out of the 1,472 samples taken across the service area, which includes tar and sour. Also, the final effluent, which leaves our wastewater treatment at Tallinna, was also 100% compliant with no failures amongst the samples taken. As we mentioned on the last webinar, we did have some colder temperatures in the first quarter of 2016, which led us to have a few more water bursts on the network, which has had a direct impact on our leakage figures. Currently, the leakage figure is 16.22% against our internally set target of 15%, which is a very challenging target. I'm not sure we're going to get down as low as 15% during the rest of the year, but we remain optimistic. And that percentage figure is a very good performance for any water company in Europe. Work continues to repair our collector at Strumy, and as we've said on numerous occasions, this is a very technically challenging repair. It's taken a little bit longer than we first anticipated, but we're hopeful for completion in the coming weeks. The contractual costs relating to the job are also within the original estimate and approval, and ASTV's major shareholder, which is United Utilities, continue to provide us technical support throughout the construction phase of the project. So, moving on to the tariff dispute. Firstly, a reminder with respect to the background of the dispute. AS Tallinna Vesi has been in a local court dispute with the Competition Authority since 2011. This dispute arose because the Competition Authority has to date refused to approve the annual water tariff applications submitted by the company, which is contrary to the terms of the services agreement that was signed back in 2001 when the company was first privatised. So there are two parallel legal paths being taken at the moment. So first of all, an update on the local court case, or really just a repeat of what's been said previously. On the 5th of June 2015, Tallinna Administrative Court made their decision and dismissed ASTV's claim. Tallinna Administrative Court released the reason of the dismissal of AS Tallinna Vesi's complaint on the 12th of October 2015. The Administrative Court was of the opinion that the tariff part of the service agreement, which has in itself been deemed a public law contract by the Estonian courts back in 2012, is not binding on the Competition Authority. Tallinna Vesi filed the appeal to the District Court on the 11th of November 2015, and we are still awaiting the hearing date. So that's more than 8 months later, so we're still waiting for our next date for the hearing in the county court. Until the final verdict of the tariff dispute, we do have a preliminary injunction in place, which means the tariffs will remain frozen at their 2010 levels. So in parallel and separate from the local court, the company also decided to pursue international arbitration. So after 2 years of trying to negotiate a solution, the Supervisory Council of Tallinna Vesi decided to commence international arbitration proceedings against the Republic of Estonia for breach of the bilateral investment treaty between the Netherlands and the Republic of Estonia. On the 17th of June 2015, the timetable of international arbitration was determined, with the final hearing set for November this year, 2016. The timetable and further details on the case can be found on the ICSID website, a link to which is included on the investors website and part of several previous stock exchange announcements, including this morning's announcements regarding the company's Q2 financial results. So the process remains ongoing. Further updates at this webinar, but of course we'll keep you informed by the investors webpage as and when anything significant does materialise. So just in summary, and as stated on numerous occasions previously, the company is open 2 discussions regarding a negotiated settlement, but so far these have not been forthcoming. So that concludes the operational and tariff dispute update. I'm now going to hand you over to Riina, who'll take you through the financial performance for the first 2 quarters of this year.
Thank you, Karl, and good morning to everyone. Now I would like to give you the overview of the financial performance of Tallinna Vesi in the second quarter of 2016. I will start with the financial highlights and then we'll give more detailed overview about sales and costs. The performance of the group continues to be good. Total sales revenue were 5.5% or 0.8 million euros higher than in the second quarter of 2015. The sales of water and wastewater services increased by 1.5% or 0.2 million euros year-on-year. It was accompanied by 0.5 million euro increase of construction and asphalting services. The gross profit in the second quarter of 2016 has been higher by 3.7% or 0.3 million euros compared to the same period in 2015. The gross profit has been impacted by higher main services revenue and lower chemical costs, which was accompanied by higher revenues and profit from construction services. Increased revenues were balanced by higher depreciation and staff costs. The operating profit has been lower by 6.3% or 0.4 million euros than in the second quarter of 2015. The operating profit has been impacted by earlier mentioned higher gross profit, which has been balanced by higher administrative costs. Compared to the second quarter of 2015, the net profit of the points was by the change in the fair value of swap contracts, but also the savings in the interest expenses. Now let's move on to the next slides, and I will comment on the changes of revenues and expenses a bit closer. Let's start from the sales. As mentioned before, total sales revenues for the second quarter in 2016 have increased 5.5% or 0.8 million euros. Total revenues from water and wastewater services were by 1.5% or 0.2 million euros higher than in the second quarter of 2015, amounting to 12.6 million euros. As we are operating with the frozen tariffs since 2010, the change in revenues is solely driven by the consumption. In the second quarter of 2016, we can see an increase in inside service area water and wastewater revenues, which was partly offset by a decrease in outside area water and wastewater revenues. In the second quarter, the domestic consumption from Tallinn increased by 1.9% or 135,000 cubic meters, amounting to 7.17 million cubic meters, and the consumption of commercial sector increased by 4.4% or 106,000 cubic meters, amounting to 2.54 million cubic meters. There has been an increase in all residential customer groups. The biggest increase, or 81%, from the total increase in domestic customer volumes comes from apartment blocks, which is also our biggest customer group. In commercial sector, the growth came from different sectors. Total volumes from outside areas have decreased by 17.1% or 277,000 cubic meters compared to the comparative period in 2015. It is mainly related to the sales to BMC as they started to use their own wastewater treatment facilities at the end of 2015. While sales to BMC have ceased, the sales to other surrounding areas have increased. As mentioned before, in the second quarter of 2016, there has been continuing increase also in construction and asphalting services revenue, which has increased by 0.5 million euros. It was mainly related to higher pipe construction. This now takes us to the overview of costs. The company's underlying operating performance in the second as mentioned before, the company's underlying operating performance in the second quarter has been good. Total cost of goods sold in the second quarter of 2016 have increased by 8.1% or 0.5 million euros compared to the same period in 2015. Direct production costs were 6.4% or 0.01 million euros lower than in the second quarter of 2015. The decrease in direct production costs came from lower chemicals and electricity costs. Saving was slightly balanced by higher water abstraction charges related to 3.2% higher treated water volumes. Chemicals costs were lower mainly due to favorable methanol price, as the methanol price is down by 45% compared to the second quarter in 2015. In addition, the usage of different chemicals in wastewater treatment has been more efficient. Electricity costs were lower because of lower electricity prices balanced by higher treated volumes. Staff costs have increased in the second quarter due to high average headcount and also increase in salaries compared to 2015. Construction design and asphalting services costs have increased by 0.4 million euros in the second quarter of 2016, which is related to higher construction services revenue mentioned earlier. Increase in depreciation costs by 10.7% was related to accelerated depreciation of fixed assets, which will cease to be used in the wastewater treatment process. The increase in administrative costs is mostly affected by increase in dispute-related legal costs and in earlier mentioned staff costs. Legal costs will continue to be affected by the continuous legal disputes, especially in the international arbitration, and they affect administrative costs up to the end of both local and international disputes, the amount of which is dependent on work that needs to be put into both disputes. The final hearing in the international arbitration, as Karl already mentioned before, will be held in November 2016. Net financial expenses have been mostly affected by the non-monetary revaluation of the fair value of the swap contracts, having a negative net expense of 1.22 million euros year on year. But the positive side of financial costs was saving in interest costs, hence the interest costs are relatively lower in 2016 compared to the same period last year. If we would now move on to the cash flows. The cash position as of 30th of June 2016 is strong. The company's cash balance stood at 30.8 million euros, forming 15.1% of the total assets. Compared to the end of the second quarter of 2015, the cash balance has decreased by 2.25 million euros. The biggest contribution to the cash inflows comes from the main operations. The company's collection of receivables continues to be high, which is 99.76% on average. In the 6 months 2016, net cash flows from investing activities resulted in a cash outflow of 4.38 million euros. The money paid for fixed assets has been showing an increase of 0.7 million euros compared to the comparative period in 2015, amounting to 5.41 million euros. The compensation received from pipelines decreased by 1.59 million euros compared to the 2015, amounting to 0.97 million euros. Decrease is mainly related to the collection of extension program, which last payment was received in the first quarter of 2015. Financing cash flows are affected by the reduction in interest payments by 0.65 million euros and are related to the renewal of swap contracts in the second quarter of 2015. Most of outflow from financing activities in both years were related to dividend payment in the amount of 18 million euros. Thank you for your time and attention now, and all your questions are really welcome.
Hello, you can type your questions in the chat window. At the moment there are no questions, but usually there will be, so let's give it a moment. Still no questions. I'm surprised. They're more than welcome. Also, if you have questions later, you can send them via email. And there are still no questions. So let's leave it to that. I'm thanking you.
Okay, thank you very much. It appears we have no questions. So thanks for tuning in today and listening to the webinar, and enjoy the rest of the summer vacation period. Thank you. Bye-bye.
Thank you very much, and bye-bye.